Hey everybody, in this video I want to teach you everything you need to know about equipment financing, right? So let's go into why it's so important. It's important because equipment is vital to grow any type of business, whether you own a restaurant, you're in logistics and you want to buy trucks, you are in manufacturing and you need more manufacturing equipment, if you're an auto repair owner, and you want to buy, a lift, an alignment rack. These are all things that are going to allow your business to grow. The biggest thing to know about equipment financing is, well, one, what are the qualifications? How to use it? Knowing how much revenue that piece of equipment is going to bring into your business. So these are all things we're going to talk about here in this video. So let's go into just the basics, okay? Typically, for equipment, you don't want to pay for equipment in cash. You don't want to pay for equipment over, if you get it in an SBA and pay for it over 10 or 20 years, it's a little long to have that note out for that. I probably wouldn't use an SBA loan to buy equipment. That's why equipment financing is so important to you. So when you're looking into, how to purchase equipment, really the best way is equipment financing, and the reason I say that is because the terms are typically going to be anywhere from 1 to 5 years. All right. Now let's talk a little bit about the types of financing that, the types of equipment that would qualify. Usually you can use equipment finance for new and used equipment. When we're talking about used equipment, it's important that the equipment has value. Okay. What I mean by that is, if you're trying to buy a truck that's 10 or 15 years old, it's probably not going to get approved, right? If you're buying used kitchen equipment and it's determined that that equipment isn't worth the price that you agreed to pay for it, equipment financing isn't going to work. So new equipment's a lot easier. When you're talking about used equipment, you need to make sure the value is there. Okay, second, you want to know exactly what type of return on investment or increase in revenue that piece of equipment is going to provide for your business. All right. So when we're talking about this, any type of truck that is, I would say 8 years or newer, okay, with not outrageously, high mileage. Okay, when it's kitchen equipment, typically new or, equipment that is valuable, it could be a fryer, an overhead exhaust fan. Those things, it's important to have in the restaurant, and it's important to not pay for them, in cash, because what's going to happen is it can constrain your cash flow, right? Same thing, manufacturing equipment. If you need a bottle capper or anything that's going to make your manufacturing business run better, use equipment financing. Let's talk about what you need and what are the minimum qualifications for equipment financing. Typically, if you are an existing business, okay, and you have 600 credit and decent cash flow, meaning you're not negative in the bank, you should qualify. Okay, if you're a new business or a startup and you want to use equipment financing, a few things that an underwriter is going to ask you are pretty simple, right? They're going to want your credit to be over 700, as opposed to if you had an existing business and that where you could be over 600. And they want to know that you have experience in that field. So a lot of times, if you're a startup, as long as you have 700 credit and you can show a resume or what you've done in this space prior, in that industry prior, you have a shot at getting that equipment financed. Now, how it works when, you need to actually apply, right? You need a one-page application. You need the last 6 months of banks, a tax return, and the invoice for which the piece of equipment that you want to purchase. And if you're looking at buying several pieces of equipment, that's okay. You just need an invoice for every single piece of equipment that you want to buy. So from there, if the total of the equipment is 100,000 or under, it's usually a lot quicker, a lot easier, and sometimes you don't even need to send the bank statements. It just helps the underwriter get an idea, and then it'll give us a little bit more leverage when we're speaking with them. Okay, so if it's under 100,000, it's a little bit easier. If it's over 100,000, okay, they're probably going to ask for 2 years of tax returns, 12 months banks, and financials. When I say financials, what I mean is a profit and loss and a balance sheet. Okay, they want to make sure you can afford the monthly payments. So you get that, you get the invoice, and then it takes, roughly 24 to 72 hours to get an approval, and typically the whole process can take anywhere from 3 to 5 business days. So it's pretty quick, pretty easy, and it's just getting the right equipment that's going to help your business grow, and then making sure you get sensible financing. When I say sensible financing, I mean when you use equipment financing, it's going to be anywhere from 1 to 5 year term with monthly payments, right? Instead of using, let's say, a working capital advance. If you buy equipment with a working capital advance, it's good that you're getting the equipment, and as long as the increase in revenue covers the payments, that's good. But ultimately, you really should be using equipment financing, because equipment financing is going to stretch out a little bit longer, and it's going to be, a little bit cheaper of a rate. Okay, so I hope that all makes sense to you. Now, a few things to know. The more complete the application, the quicker it's going to get through underwriting, and the quicker you're going to have an answer. All right. Second, when you're looking into, equipment financing, a lot of people want to know what is the longest term that it's going to go out. The longest term is typically going to be 5 years on equipment financing. All right. I hope that all makes sense. If you have any questions, please feel free to email me. And when you're looking into equipment financing, know that there are several options. So what we typically do for our clients is, if you were to come to us and say, hey, I want to buy this piece of equipment, we would collect the application, the invoice, the banks, the tax return, and everything else that we need. And then we will actually work with several different underwriters to make sure that you get, the best terms possible. All right. Now, the other thing to consider is, when we go through this process and we're working with underwriters, if you're doing $100,000 a month and you have, let's say, 3 trucks, for each additional truck, how much more revenue is that going to bring in on a monthly basis? If we can show underwriting that by you getting, an additional 2 trucks, you're going to be able to do $150,000 a month, that makes it easier to get approved, because obviously you're going to be cash flow positive on a monthly basis, right? Because obviously the payment for 2 trucks is going to be way less than the revenue that's coming in and the profit that it's generating for your business. So those are all things that, are considered in this entire underwriting process, right? And there's a bunch of different types of equipment that people don't think they can get financing for. You think they have to go to the dealership. You don't have to go to the dealership. If you went to get a piece of yellow iron, like a backhoe or a skid steer, and for whatever reason, Caterpillar turned you down for their financing, that doesn't mean that you're not going to qualify for financing. It just means that Caterpillar said no, right? So if you took that piece of equipment to us, we'd be able to work with you to try and get you the right type of financing, so you can buy the equipment quickly and easily and start using it for your business. There's other pieces too, so all yellow iron, all types of trucks, any type of restaurant or manufacturing equipment, really anything that we can tie to the business that's going to help the business generate revenue, whatever type of business you're in. You can even finance office equipment, right? What you can't finance, or what underwriters will say no to right away, is anything that has nothing to do with your business. So as long as the piece of equipment is going to help your business and it's going to allow you to, run the business smoother and increase your revenues, that's the type of equipment that you want to, submit for equipment financing. I hope that makes sense. I hope you start thinking about ways that you can increase your business by getting different pieces of equipment that maybe in the past, 1, you didn't think you could afford, or 2, you really didn't know how to get it financed. All right, and again, any questions, feel free to leave a comment or reach out to us, because we really want to help you grow your business. Thank you.